Hey everyone, this is John Feneck with the Feneck Commodities Report, and with me today is my YouTube partner Don Durrett. Hey Don, how you doing today?
Good, John. Looking forward to it.
Yep, another recording over 3,000 gold, our only our second one. So exciting times, and we've got a great guest later today, Ian Berzins, who is the new CEO of Line One Metals. That ticker is LIO in Canada, LOMLF in the States, and we'll be hearing from him in about 20 minutes. First, we wanted to kick off with some macro for you as listeners. We get great feedback on this. And I also wanted to mention our two conferences that we'll be talking about on shows in March and April here. Don was nice enough to speak at our Florida conference last year at the Four Seasons, Fort Lauderdale. It's a beautiful location on the ocean. We've got a tremendous lineup this year already planned on the company side. But also, I spent a week in February in Florida meeting with about eight or nine different hedge funds, private equity firms, large brokers that are starting to get interested in our space. It's very exciting to see some of these generalist investors, really come to me and say, "Hey, saw your conference last year, couldn't make it, interested in learning more this year." So May 11th through the 13th is Florida. May 14th through the 16th is going to be Atlanta, Georgia, in the financial district, which is known as Buckhead there, at the Whitley Hotel, which is the newly renovated spot in Buckhead, formerly the Ritz-Carlton. So we're doing stuff at luxury resorts for a reason. Big money likes to go to nice places, and so we're trying to do shows a little bit differently. There's obviously a higher cost to doing that, but we think it's worth it because companies are really pleased with the kind of clients that are coming, and the clients have a really good time and can bring a spouse and really enjoy themselves. So with that, Don, I wanted to kick off the macro side. We obviously had the Fed yesterday, came in with kind of what was expected, right? No decision to move up or down in rates. That was the consensus. We don't have anything now until May. And June, mid-June is still going to be the first cut according to the kind of rhetoric that we saw yesterday. But as I said on our show many times, Don, when they came out with that December 18th kind of downgrade, if you will, from four cuts to two cuts, I just still don't believe that that's possible this year, and that there, as you put it last time, might be an emergency cut somewhere in here, or just three, 25 bip cuts instead of two. What was your take on yesterday's, discussion with Fed Powell?
I actually thought it was fairly important what he said historically, because I think this is one of those meetings where it's going to come back and haunt him, I think.
Okay.
So he said that he thought the tariffs were going to be transitory.
Yeah,
Why would
he
he
did.
use that word? Why would he use that word again? I mean, oh my goodness, because I think the tariffs are going to be absolutely awful for the economy. So he said that he wasn't worried about tariffs for the recession. He wasn't worried about tariffs for inflation. He should have been scared to death of both of those outcomes.
Mhm.
I don't think he's paying attention to Trump. Um, I think everybody is in denial here of it's like Trump has been telling us that tariffs are what he is going to use to change our economic policies in this country. That is his number one tool. He's going to use them, and he's going to use them significantly. And it's going to cause problems. It's going to cause inflation. It's going to cause a slowdown in the economy. It's going to cause more than that. It's going to cause a recession, which Trump Powell said that it's not a high likelihood. It's like, come on, you're just not paying attention here.
Right.
I think that I've been saying this all year that the only thing that matters is the S&P, and the S&P got all the way to all-time highs in January 6180, and now we went all the way down. We went down 10%. And now we're back off to 8%. And I think that I said this is a dead cat bounce. We're not going back to all-time highs here, and that we're going to have a leg down in April. I think we're heading to 5,300 or lower here early April. Um, and Powell should be scared to death of these tariffs, and he's not. The market's not. The market, the other thing that came out was the dot plot, and made people were like, they're optimistic because it was more hawkish. It was like, okay, we can cut now. Inflation's under control because the last couple inflation numbers, PCI, PCE, were both in line. So everybody's like, inflation's under control here. We got true inflation a little under 2%. Everything's rosy on the inflation front. So the dot plot got better, people like that. And then the combination of the dot plot and Powell's comments, in the market was up, a little bit. But like I said, it hasn't bounced that much. I mean, we're at 56. Last I looked, it was 56.62. Um, that didn't bounce much off the bottom. I think the bottom was like 55.30, something in there. We didn't get to, we never got under 5,500. So we haven't bounced that much. Now we're running out of time. Tomorrow's Friday, and then you have next week, and then that's it. And the following week you have April 2nd. So, and I think next week is going to be, whenever you have a big decision, things tend to slow down. The volatility tends to slow down. So next week, I'm not expecting any big moves up or down. We might have a big move down, but I'm not expecting any big moves up heading into April 2nd because everybody's going to be nervous. I mean, that's what we always see when you have something big's coming. Everybody kind of cools the jets, but it's all about the
Right.
S&P. Um, if the S&P goes below 5,500, you have a little bit of a window to bounce because if you don't, you go below 5,500, you get a 54 handle. That's when people start getting nervous. Once you lose that 54 handle, the risk goes up. So risk just keeps getting higher and higher. You get a 53 handle, you get a 52 handle. Risk just goes up. More and more people are jumping off the boat, especially foreign money. I know we've talked in our shows about all the foreign money that's basically was chasing the Max 7 the last 2 years. Now that
Yep.
money's leaving, and the European markets are going up. The euro's going up. I think it was at 109. It was all the way down to 103. I don't know if it got to 109. It was all the way down to 103, 102. Now the euro's bouncing because money's leaving our stock market. And when it leaves our stock market, they convert it into euros, and that's how it works. And
Sure.
so I don't think that money's coming back. So we're going to see more foreign money leave, and we're going to see more U.S. investors leave. So that's downward pressure on stocks. And I've been saying this that everybody thinks that gold and silver are kind of off to the races here. I'm seeing a lot of 3,000 is going to hold, 2,900 is going to hold, a lot of bullishness. If I'm right about a crash in the stock market, it crashes down 20%. So we're looking at 5,000 S&P. If we get a crash, I think gold and silver will correct here. I'm thinking at least 5% on gold, somewhere between 5 and 10%. So I don't think we're off to the races yet. I think silver and is telling us a story here. Everybody's thinking silver, getting ready to go here, 34, 35, right? Well, we're at 33, 33.50 today. So silver's like, it's not keeping up with gold. Gold's all the way to 3,044 on spot. That's amazing.
It is amazing.
3,044 on spot, and silver's only 33.50, saying, I'm not coming with you. And I always call it gold is big brother, and gold is like in the lead. And little sis, I call little sister, I call silver little sis, and she hangs back. She waits till the coast is clear. She follows her brother, and then her brother he whistles, okay, it's time to go. And silver she just comes running. And she's hanging back, and when she hangs back, there's a reason she's hanging back. And I think that hanging back is this crash that's coming. So I've been saying, it's like we have some headwinds still for gold and silver. And that headwinds I've been saying is the S&P. Keep your eye on the S&P. It's the only thing that matters. Everything else is noise. And now we got above my breakouts. I'll end it here. My breakouts is 3,000 gold, 350 HUI, and 35 silver. We are above 3,000 gold. We are above 350 on the HUI with 357. but silver hasn't confirmed. And until that silver confirms, we don't have a breakout. So be cognizant of that. We don't have a breakout yet, people. The HUI has not broken out. I mean, it's at 357. It might get to three. I actually said that it would get to around 360, maybe 370, but it'd be a false breakout. So here we are at 357, and I still think this is a false breakout. What I mean by that is that we're going to get a correction. It's not going to just rip the 400 here. In other words, what's next? 375 or 300? Let's say 315. I'm thinking 315 is going to be, we're going to see 315 before we see 375.
Okay, so a mild correction from 357, right? Not a 20% correction. And I will point out that the recession word that was used by Trump on a Sunday, March 9th, really caused havoc in the markets March 10th, Monday, if you remember, right? We had the NASDAQ down 3.8 plus. You don't see many days historically going back to the Great Depression that the NASDAQ was down 3% or more. It just doesn't happen much. So that to me was a warning sign. I literally was writing my investors and followers that day saying, guys, this is something to take note of if you have broad market exposure because this is nasty, nasty price action today. And to your point, Don, it did bring down gold. It did bring down silver. It brought down GDX and GDXJ quite a bit that day. But what I found interesting was that the following Tuesday and Wednesday, which was, I think, the 11th and 12th of March, you saw a massive follow through in our sector again as a safe haven. So I'm less worried about a major correction. I think that you're just going to make yeah, you might see some sell off in gold, but it's not going to test like 2,500 again as it did in the fall. It's that game is over. I think 2,600 is the new floor, but it could even be 2,700 now that we're at 3040, right? Like, I mean, it's very possible that we're seeing that. And sure, no one wants to see 2,700 again, but let's be realistic. Like, we're seeing gold just kick, here, and at some point, it's healthy to get a pullback. um, and yes, to your point, it would be wonderful to see silver confirm, but it hasn't happened yet. And so the positive though is that we got above that 32 to 33 level. Because if we failed there a couple weeks ago, we would be in big trouble in silver. It would have retested 30, I think. But it didn't. And so it's been holding 30 now for weeks and weeks, which is really bullish, as you know. I mean, silver's nemesis was $30 for 11 years, right? So like we're through that. I think it's important to like note that that's positive, but to your point, when you look to the gold to silver ratio, which is an ounce of gold divided by an ounce of silver, you're still over 90, which is insane. So either gold has to sell off and silver has to trend, or silver has to move up, and we'll see what happens here. But it surely is interesting. And meanwhile, I'm just monitoring and building my buy list of a lot of silver juniors that I want to pounce on when I get that confirmation, because that's what you have to be doing as an investor right now, I think, is building that list, putting your toe in the water a little bit, but not full positions.
Yeah, I find it really interesting that the cycle lows that I keep targets that I keep putting out, they all seem to rhyme. I mean, you have this either 27 or 28. So I think it'll, like I said, you said the floor is probably 26, 27. I've been keep raising my floor up. I think 27 is, I think that is low as it's going to go. But I'm becoming more bullish, and maybe I'm too bullish, but if you look at 28, the number 28, so you have 2,800 gold, which would be about a 5%, a little bit more than a 5% correction, and then 28 silver, and then 280 HUI. I think those three, if the number 28, I think it'll be plus or minus 10%. If you're thinking those are going to be the cycle lows, I
Mhm.
think it'll be plus or minus 10% off of those. So those are some really good targets. Now, those are cycle low targets. So I think that's as low as we're going for 2025, um, plus or minus 10%. But once we break out, once silver starts ripping, then the cycle at that point, everything's gonna just gonna get is this. we're going to have higher lows, put it that way. So we
Mhm.
cycle low at this 28 number, 2,800 gold, 28 silver, 280. That's our cycle low. Before you know it, it's going to be 30 is going to be your your number, going to be your cycle low number. Then it's going to be 32. It's just going to keep going up, up, up. But I think the real breakout number that I'm really looking for is the HUI, and this is going to coincide with silver ripping. So if silver gets to 36, 37, you got the HUI at 360, 370. So I'm thinking right around 370, 375 on the HUI, which would coincide with about $37 silver. I think that's when it's like you miss the boat. At that point, it's just gonna rocket ship higher. That said, I think there's a possibility that we get a pause in April. In other words, the entire month of April is a pause because I think we're going to get deep selling in the stock market in the first week because everybody's going to go, oh, Trump's not taking the tariffs off. He's not taking them off. What's going on here? He's leaving them on. He's doing a trade war. And every day and then the stock market is going to start going down, down, down. And Trump's going to go, hey, I'm not taking them off, people.
Yeah.
So, and then we're going to get this pause through the whole month of April, and then that pause could last all the way to June. But I think my expectation is we're going to get this prolonged pause in everything, in the S&P and gold and silver, pretty much everything, oil. The only thing that's not going to pause, I think we'll get a little bit of a bounce in the dollar and a little bit of bounce in the bonds because those are the safe havens.
Hmm.
But it won't be a huge bounce. It won't be a normal bounce because it's a dead cat bounce. Anybody that's buying those bonds or buying that dollar is asking for it because they're just going to go up and down. They're going to turn around and go
Right.
back down. So now bonds will last a little longer than the dollar, I think. Bonds might last 6 months. So if you buy some bonds, you might be okay for six to 12 months. But at a certain point, inflation's coming back, and everybody knows it, I think. But the dollar, I think, will be short-lived. The um, the dollars because they're going to cut rates. And so if the dollar gets even a little bit of a bounce, let's say 103. If it goes 104, 105, I don't think it's going to 106. But I think it'll be a very short-lived bounce in the dollar.
Hmm. Well, dollar is holding support right now on the 1 and 3 month charts. We'll see if it holds. But like I just wanted to say one thing I kind of disagree with in what you just said, which is um, uh, I think there's just a compression of time if you look back over the years in terms of how quickly or how much time elapses in between corrections. Like you were just saying, we could see a 90-day, kind of situation. I really don't think so. And the reason I say that is because of what I just outlined with March 10th, and then what happened after that in our sector. Right, it was almost an immediate bounce back. Like every dip in gold is being bought, and that's just one piece of our sector, right? It's not the equities and or silver. I get that, but today, like I was watching the action, gold opened down. It had a pretty bad morning, and then it just again started to appreciate towards the close. It's like the resiliency is there, and I think it's going to get noticed by more and more generalists. Like I just said on Kitco a few hours ago, I've had more clients come to me that are generalist investors in the last 2 months than I have in 6 years. Like there's more and more people that are a real estate guy, a broker, a construction worker, like all these people that had nothing to do with mining stocks coming to me saying, "Hey, I own a lot of physical gold, but I want to play the equities, and how do I do that?"
Yeah, well, everything that we've been monitoring for the last, year plus, people have been nervous about it, but the stock market has been ripping, so people have
Right.
been able to ignore all the bad news. There's been a lot of bad news since COVID. But this fiscal dominance, where we've been printing all this money at the government level, which that's what Trump is basically saying, we can't do this anymore. That fiscal dominance has allowed people to have a sense of, confidence in the economy and the stock market. But now everybody's going to, I've been saying that the fear level is going to be higher than it was in 2008 because in 2008, the Fed had tools. Now the Fed's flying blind. The Fed doesn't have any tools. They can't cut rates as aggressively. They can't print aggressively. They've lost their two most important tools. Now everybody knows it. And it's like the emperor has no clothes, but everybody's in denial. So fear's going to explode. One final point, and then we can bring on Ian. I think the reason why I'm saying that this pause is going to be could be prolonged is
Mm,
because I'm expecting a credit event, a credit liquidity event, which we have not had. This sell-off, this recent sell-offs that we had, the only thing that scares gold is liquidity problems, liquidity events. That's the only thing that scares gold. That's when gold goes down because people are searching for liquidity. They need money. They're looking anywhere they can find it. That's when gold goes down is a liquidity event. That's where you get your 5%, 10% drawdown in gold. And when the stock market goes sub 5,300, I think that's when you get a liquidity event. And the reason why you're going to get it is because the leverage in the system. And what happens whenever you rug pull an economy, the people that are, you know, swimming without the bathing suit and the tide goes out, they're the first ones that get exposed. It's the ones that are over levered. And there's a lot of
right.
over levered companies out there right now, and they get exposed really quickly. And so that's when I think we're gonna have a Lehman type event here in April. Um, and that once you go like sub 5,300 and people start, you know, pulling in, pulling in the liquidity, you get a liquidity credit event, that's when gold will get hit. If we don't have one, if we don't have any liquidity, any credit problems in the financial system, then gold will probably hold 2,900. It'll probably hold 29. Like I said, the only thing that's going to scare gold down is liquidity problems.
Mhm.
Um, so we'll end it there.
Okay. Well, thanks for your comments, Don. And we'll introduce Ian Berzins now, who is the new CEO for Lion One Metals. Ian, if you could join us. Hey,
Hi, John. Good morning or good afternoon, and hi, Don.
Hey, welcome, Lynn. I'm looking forward to it.
yeah. So just to introduce Ian, Ian and I met probably about 5 years ago. He was running Canadian Critical at that time, was called something else, and the ticker on that is RIINF in the States. We still own a nice position in that. It's been cash flowing. Don, it's something else we could probably talk about off camera, but it's been cash flowing through a relationship with New Gold for a number of months now, and it's just been flying under the radar, even at $5 copper, which is bizarre. But I think most copper juniors are just suffering like uranium juniors are right now. It's just very, very weird. But Ian, I know you've had a good amount of time now with this project in Fiji that Lion One has, and you spent a lot of time there in the last couple of weeks since the announcement. So, would you be kind enough to give us a 10 to 12 minute overview of what's happening at the company, and then we'll ask some questions?
Sure, John. Thanks very much, and look forward to presenting. I guess if I step back just a second, John, how I got involved with this thing, probably late December, I had a discussion with Wally Bearkoff, who's the founder and chairman of Lion One. Wally's been involved with the Tuvatu project back to 2008. And actually, at the time, he was also the owner of Atakula, which is the larger gold mine in Fiji. I could spell Fiji, but I didn't know where it was really. And so we talked a little bit about the project and the attributes and the challenges. And going back in time, I worked with Wally between 93 and 96 at the Con mine in Yellowknife. And Wally subsequently sold that mine for about 1.5 billion to Newmont. So he's had a tremendous track record over the years of identifying value and then at some point in time, sometimes selling it to a major. So as you mentioned, I just got back from Fiji. I was over there for about 7.5 weeks and kind of dipped my toe into the humidity, which was different for a Canadian. But I was very impressed with what's been built to this point in time. Um, I'm really someone, I like gold. I like underground. I've been working in places that have been infrastructurally challenged, and Fiji does have its challenges. But a lot of the boxes that I tick when I look at a project, the project certainly added up. So I was happy to get on the ground, meet the team, strong Fijian national presence. We have over 450 Fijian nationals on the project. Number of the fellas and the young women are third generation miners from Vatakula. So it's really quite interesting. Um, People are very excited about the project, and yeah, it's been an interesting kind of dip into a new culture for me. But again, when I look at these things, one of the big things, as you guys know in Canada, I mean, you can bang your head over regulatory permitting issues, it seems like, for part of your mining career just to try to get something going. So I'm very impressed that they are permitted, ready to go, and the project is really it's transitioned through a pilot plant phase at 300 ton a day, which sounds small, but it was really proof of concept. So the mill does work, and in fact, it's working actually better. It's kind of running daily between about 360 and 390. Earlier today, I think, or late yesterday, we just announced that we're actually moving forward with an expansion of our flotation plant. So the flotation will be added to the current gravity and leach circuits to actually improve recovery. So, going forward, it's really a show me story now, in my mind, tremendously high grade. I've never seen grade as high as Tuvatu. And we're talking, if someone's following the stock, a couple of weeks ago, we put out news releases, 2,700 grams of gold over zero point 0.3 meters. The reality is that wasn't a continuous gold mineralization. It was probably over about zero point 0.1. So arguably 9,000 to 10,000 grams over even a narrow width. So you're talking kind of inches and centimeters of these veins, but they're tremendously high grade. And so it again, it's a different it's a complex ore body. It's narrow in places, and as we go deeper, the feeder systems we're trying to understand, but it does look like it could be a very long life asset. And just for comparison, if I can, the Vatakula mine has run for 90 years and done something in the range of about 11 million ounces. So these are they're what they call alkaline gold systems. They're blessed with grade and volume, and comparatively, most of the, if not all the alkaline gold systems in the world are controlled by majors like Newmont and Barrick and others. So what's particularly unique is that Wally's been able to develop a project in a relatively new jurisdiction for most people, but it's potentially a very strong alkaline gold system that has similarities to Vatukoula and arguably Porgera and maybe Cripple Creek in Colorado. So, kind of in a nutshell, John, I could stop there for a minute, and if that's at least as a starting point.
Yeah, that's great. So I'll start off with a few questions. Let's just talk about the producing mine that you just mentioned nearby yours, Ian. So did I hear you correctly that that's been around for 90 years?
90, yeah, 90 years. So it's a so there and what's interesting about that in my mind is it demonstrates that Fiji, has a culture of mining. So it's not
Yeah.
like you're going into an area which is really doesn't get it, doesn't understand it, doesn't want it. So it's kind of 100-year mining history, very stable regulatory regime. The workforce is extremely skilled. Again, we benefit from some former employees from Vatakula that came over to our mine for various reasons. The government is supportive, and what's interesting is that mining actually with gold is one of the primary export industries other than you may have drank Fiji water. So Fiji water, I think, is the premier market
Mhm.
commodity other than sugarcane. So, but gold is important to the government, and you are in a system with landowners, but of the royalties that are taken from the mining, they actually 80% go back to the local landowners. So there's strong relationships on that front. So again, from my perspective, a lot of the heavy lifting's been done with relationships. And I would say that those are the team on the ground has done an exceptional job, going back to when Wally first acquired the property.
Great, thank you. So what is the publicly announced life of mine on your project, and where do you think it could go, given that I'm sure that's a low number?
Yeah, and we're wrestling with that a little bit. I mean, we've got a mineral resource estimate, but frankly, in the last quarter, 40 to 50% of the gold and tons that were mined were outside the MRE, which is a good thing. And so we're looking at technical reports that were done a few years ago. And as we develop, it's really going to be a matter, I think, of understanding the genesis because you could drill this like a pincushion, but you might not find a whole lot more simply by drilling. In some cases, you've really got to get on the structure, that old adage about drill for structure, drift for grade, because you could have a fabulously high intercept in the thousands of grams, and a meter wide, you might have a dead hole. So it really comes back that it's a unique deposit. When you're on the structures, you're on them. One of the features here that was unique to me, I couldn't spell it, but Roscolite is really a vanadium mica type gang. It's really a gangue mineral, but gold has been associated with Roscolite not only at Vatacula and our property, but also over in I believe in Pugaris. So this is again, we're trying to understand. You might not always find the gold, but you might find some indicator metals that'll help you find where the systems are coming from. So we believe it's kind of like if you can imagine a tree with a big root in the bottom and branches up top. We believe that there is a deeper feeder system, and what we're actually attacking is some of these upper branches. So right now we've actually got about four areas that are near surface, two that we're primarily mining called Zone 2 and Zone 5. There's actually an exploration drift that was driven by Empire Mining in 1990 and a little bit of mining done there, but some very good channel samples. So we're trying to understand that. That area is actually part of our ventilation system right now. And then we've got a really exciting area called the West Zone. And the West Zone, we have to decide, do we attack it with a new decline from behind our admin building, or do we actually come over from underground? So there are some really interesting opportunities near surface. The big prize we think will be down deeper in what they call the 500 zone. And there was kind of a discovery hole there that was 75 meters, I think 26 grams, if I recall. And that's really could be the prize. So going forward, and I can get into this in a minute, but the mine was initially developed kind of with a strategy of long hole or a bulk mining. So the company elected to hire a contractor from Australia to really get this thing going. Most of the milling was done with the management from Canada, but the mining was done with Australians. And as they set it up, they kind of set it up as long hole. Personally, I'm of the view that the upper portions need to be more of a hybrid, where you have some long hole where you've got stockworks, where it makes sense, where you've got width, but you should augment that with a significant portion of conventional mining. We're leaning towards right now shrinkage as one of the more conservative mining methods, and we're actually developing our first shrinkage stope beginning about 10 days ago. So that's kind of in a nutshell what we've got. So in terms of mine life, John, I'm still early days for me trying to understand that question. I mean, I'd say you're kind of in that 8 to 10 year time frame, but the key is really going to be, unfortunately, as things move forward, the original mobile fleet was pretty dated. Some mining equipment's bulletproof, other stuff not so much. And so there has been some challenges trying to advance the declines deeper. But I'm of a view that as we increase grade and as we get the declines deeper, we'll simply be able to add more stopes. So this thing is the real disconnect, if you will, I think for any shareholder is looking at these fantastic drill results in all these upper zones, and yet the company's mining at 5 grams. So why is that? So I think that's really the show me part of this story, that as we get our grade up, more towards the resource, which is currently 8 to 9. I'm of the view that the workforce is extremely experienced in narrow vein, and so I think we could do tremendously well in the shrink stopes. And again, part of that is that when you lock yourself into long hole, you're kind of locking yourself into multiple sublevels, let's say 18 meters apart. Whereas if you buy into more of a shrink where you could, let's say, have a stope that's 50 meters or 150 feet vertically, if you've got vertical continuity of one or two veins, then you don't have to do the lateral development. So that's kind of the balance that we're doing. We are going to gradually try to replace some of the existing equipment. Some of it's a bit oversized, but we have, for example, we have 2.5 yard scoop trams coming from China. We're introducing a scissor lift we'll use in Canada. We have what we call long toms, which are really, they're a buggy with jack legs on top. So it's a poor man's jumbo, but it allows you to drift on narrow structures. And we're introducing stopers. So in Fiji, they call them air legs. An air leg for me is a jack leg, but it also could be a stoper. So you can either use the machines laterally or vertically. So again, I think it's early days for us, and we clearly are in the business right now of trying to increase the number of workings, and then that will support the decision to move the plant up to about 600 ton a day.
Okay. So you had mentioned that you're advertising 300 TPD, but then you're at 360 to 390. So how long would it take to get to 600 in your view, roughly?
Yeah, so, and again, as I mentioned, we've actually had a couple days at 500, but it's a wet climate. The equipment's outdoors, so when you get too much moisture, you're going to get slime. So 500 is not the perfect run rate, but I would say if we kind of cap it at 400 until we get the flotation circuit in. But going forward, John, I think it's really going to be more a function of stopes. If you don't have workplaces, then you're limited to how you can blend. And so I'd like to see, for example, probably about 10 or 12 stopes so that we could do some grade control and more selectivity. But before we go to 600 ton, again, on paper, you see these projects go from 300 to 600. Underground mines don't work that way. You've got to do that ramp up. So I would say that we've pretty much demonstrated that the mill can run at these rates. We add the flotation, that's going to improve the recovery of what we're doing. And then I think it'd be a better part of a year before you would be able to get enough stopes to be steady state at 600. So the flotation expansion is going to be about 2.3 million Canadian, and we're planning to have that completed by Q4 this year. That's actually part of the expansion to 600. To go to 600 tons, we have to add a bit more. The crushing plant is oversized at 1,000 ton a day. We have to add some more grinding capacity, and then we have to add another couple at the back end. We have to add a couple of filter presses. So in our system, what we're doing is we're running filter presses, and then we're trucking that material to a permitted tailings facility about 3 kilometers away. So some of the foundation work's already been done. In the case of the flotation project, we already own the regrind mill or the tower mill, so that's bought and paid for. So we will go with Chinese suppliers for a number of reasons. Number one, most of the plant is Chinese built. We have relationships, proximity, and price for as well. So at this point, the expansion to 600 has been well thought out, and it's really a matter that it didn't make sense to rush to 600 in my mind if you don't have the workplaces in online to feed it.
Makes sense. Okay. Don, I'll turn it over to you.
So Ian, on the 600 tons per day, so you don't have an idea of when you'll get there, or do you have an idea when you'll get there?
Yeah, I mean, like I said, Don, the flotation portion will be done this year. We really, I think we could be doing it in 2026. The real issue for us is going to be that if we haven't created enough workplaces, then we'll have to decide, do we build it a year early in anticipation, or do we wait? The largest financial commitment we have at the mine is actually in the TSF, the tailings storage facility. It's a world-class facility. It's a lined pond, and we're working with our technical consultants, and we'll be doing. When you raise a pond in this part of the country, you really have to only raise it in the dry season. So we have to make sure that we raise it in a downslope manner to make sure that we can get through the next wet season. So we'll be spending about 5 million Canadian this summer to do this next lift, and then it looks like we may not have to spend money in 26. So it really comes back to the capital. If the mine is again producing at higher than the 5 grams, management and the board may decide let's just green light the whole 600 ton a day plant because, like I say, it's already been designed and it'll probably be all put together. I'm going to say less than 10 million. I should know this number, but it's not an egregious amount of money that we have to spend to get that capacity up to 600. And there are some physical limitations just on the footprint of the property. But the original study was done based on a 1,000 ton a day operation. So there's certainly expansion capability, but I would say we wouldn't be greenlighting the full 600 ton a day plant till next year.
Right. So people that are listening to this are thinking it's a small mine. We're talking about 300, 600 tons per day. But that's not the case. This is a very large property with a lot of drill targets. This is a property that has potential to be a very large mine. The only reason why I'm interested in getting to 500, 600 tons per day is to get you enough cash flow where you can start drilling aggressively because I think this mine is going to be a big mine. That's the only reason I like it. So currently, you're mining in 2025, I have you mining 35,000 ounces. Is that about right? And what's your expected AISC for 25?
Yeah, we've tried to stay away from the all-in sustaining just yet, but I mean, last quarter we averaged about 1,400 ounces, so call it 4,200, 4,300 ounces. We dipped back a little bit in February. We may not make that number, but as the grades come up, I mean, we think that it's reasonable to think about this in terms of a 60,000 ounce operation when we're running at 600 ton a day. So it will need grade, north of 4, 5, 6 grams. But that's kind of the thinking right now.
So currently your run rate is well below 30,000 is what you're saying.
Correct. Yeah.
But but by the end of the year, if you get the flotation in, your run rate's probably gonna jump up to 30,000 by the end of the year.
Yeah, I mean, I'm just trying to do the math out in the back of my head here. I mean, I'd like to finish the year at a run rate of higher than 20,000 ounce per annum. And again, if we've got the recovery, we may not get the full 10%, but even if we get a portion of that, we'll be in good shape going forward. So I think it's really a matter, Don, about creating the workplaces and the balance. And if we can bring these with the additional equipment coming, if we can double the number of workplaces with the trained workforce, then then it would be that kind of ramp up from 20 to 25 and then 30. But we're not going to get to 60,000 overnight. But I think in order to get to the higher numbers, we are going to need the 600 ton a day plant. And to your point, in this Navalawa caldera, it's quite prolific. I mean, we've got some fantastic opportunities. In fact, we actually have a porphyry copper showing there that's of interest. But all the drilling that we're doing right now is near the existing workings. So it's really infill to support the stope developments, or even our two drills that we're turning on surface are really trying to supplement or support the current mine plan. So we don't have any step out drilling planned. Our geologists would love us to do more of that, but we really felt that we had to kind of pull in a little bit and then try to have the geologists help the miners know where to go in this next year.
You talked about trying to get 10 to 12 stopes. How many tons per day can you get out of one stope?
Yeah, and again, it's a great question. On one hand, we have one stope that's yielding all 360 tons, so it's a long hole stope. It was set up that way. Typically, what I'd like to be able to do is have a complement of, let's say, a couple of hundred tons from a long hole stope. But if you do a shrink stope, it's more labor intensive, but you're actually pulling ore every day. So you get 30% of the material is swell. So you have to pull the swell because you're standing on it. So I would say that at the 360, I'd like that to be coming from 3 or 4 different sources. Whereas some days we're down to 1 or 2 stopes. Simply that's the flexibility that we've had. We are precariously close to getting on a new level off of our decline, and we actually have an incline that some of these structures we know will go right to surface. So between our inclines and our declines. So I would say that right now, if we could have 5 or 6 contributing at this 360, that would actually be more flexibility than we have today.
So the one thing you're finding on your property is a lot of high grade veins. So in theory, I mean, you guys could have a discovery, significant discovery, and have it stope. I mean, your grade could jump in a hurry, right? You could find, if you one discovery and you could have a stope on it and be mining 8 gram, 10 gram head grade, right?
Yeah, so it's a great question because one of our stopes, and I want to get into the weeds, 1116, we've converted it to a shrink stope. And typically, if we'd done long holes, they would have been 18 meters basically blind above us. We would have taken what's there. We would have missed a 160 gram gold intercept 2 meters above it. So this is where the shrinks can be very advantageous. Not only you're going to get better grade because you're avoiding dilution, but they may have the vertical continuity to go double or triple the height that, let's say, your long hole would do. And the longer your long holes are, the more chance you have, as I would say, go in the bush and go off a line, and then you end up having to handle dilution. So at a 360 ton a day mill, dilution kills you because it's just it consumes volume, which arguably if it's better grades. So I'm
Can't,
pretty comfortable these shrinks. They certainly, we shouldn't be doing them if we aren't going to be kind of north of 8 to 10 grams overall.
so you're not using an ore sorter and you can't use an ore sorter?
Well, it's again, I guess the jury's out. Another project I've been working on, we've successfully used an ore sorter on a chalcopyrite ore, and it's worked really well. We've got samples over actually with going over to Tomra, There was some work done a few years ago, but I'm not convinced it was conclusive. And we have different ore types. So we're going to do some modest testing with ore sorting in Australia. And if the problem, Don, is that we don't have a lot of sulfides. So it's a question on whether or not the sorting machines, whether it's the X-ray technology, whether or not it's going to be as effective. But it's a low-cost test, and we're going to have some thoughts on it. It might be that particular parts of this ore body might be more amenable to it. We have a pile of what we call mineralized waste, which is I'll call it low grade, that's come to surface, 8 to 10,000 tons at about 2.5 grams. If that material could be put through a sorter, we actually have we have a mobile crushing plant and screening plant. And I'm remiss to say that we've actually got a certified lab in Fiji. So for us to be able to actually test sorting is a pretty low cost initiative. And it might be that it's more amenable to zone 2 than 5, but we have mixed understanding inside, but it's something that we're certainly going to give it at least a consideration and either prove it works or prove it doesn't work.
That's good news. So I have your balance sheet at 8 million in cash and 25 million in debt. If you can tell us if that's correct or not, and then how is your debt owed? Over what time frames?
Yeah, so I mean, I'm just trying to, that would be the last financials. Now, we raised about 10.9 million less call it commissions or fees. We raised that. So our actual cash balance is higher. We do have debt covenants with Nabari. They're our prime lender. And we're, of course, working closely with Nabari to make sure that we, stay within confines of that. So we do have interest payments coming up in June that we're comfortable we'll be able to deal with. And then it's really going to depend on our performance on a daily basis. And we made about, I think, 6.3 free cash in the last quarter, based on grade that was just over 5 grams and about 82% recovery, I believe. So if we stay in that range, we'll at least continue to have positive cash flow. The gold price, as you and John talked earlier, isn't hurting us. And of course, we've got we're paying for a lot of things in Canadian and Fijian dollars. So, but yeah, so I mean, it's the debt is something that we're obviously very aware of, and we would like to be able to reduce a portion of that this year.
So for you to generate 6 million in free cash flow, your AISC has to be $1,000 or less, right?
Yeah, I don't. I'll get my head chopped off if I answer that, Don. I just don't know just yet what numbers, and I don't believe uh, I don't believe we've shared much on that front, but it's something that we'll likely be trying to do going forward.
Well, that's a lot of free cash flow I mean, you're not producing that much gold right now per quarter. You said you only produced 1,400 last quarter?
No, 4,200. So 14 per quarter per
Okay,
month. Yeah,
okay, 4,200. So you're
yeah,
at
yeah.
16,000. But 16,000 ounces of gold isn't very much to be generating. So you generated 4,000 ounces of gold and you generated 6 million free cash flow. So that's over $1,000. So maybe the ASIC's a little higher. So it's like $1,000 an ounce. So you're over $1,000 an ounce, which is okay. So you're generating about 20 million in free cash flow right now, somewhere around there, 20, which is fine. So back to your debt. Do you only have interest payments for
We
20?
have, I believe, I don't have it in front of me. It's interest for sure come June, and I believe some principal and interest by December. So again, we're in regular conversations with Nabari on that front. At this point in time, it may be that we have to look at another raise come the fall, depending on where our situation is. But obviously, if we can avoid dilution, we will.
Right. So you don't know how much principal is due in December?
I just don't have it in front of me, Don.
Okay, if you could email us that would be great. Yeah, because if the whole thing is due, that's not good.
Right.
You'd have to do, you'd likely would have to do another dilution.
Yeah, there were basically three tranches, and so they all have specific covenants with respect to them and
Or
repayment. So,
you could, right. So maybe you could roll it over. Maybe you could get another loan and roll it over. That'd be good, right?
well, and it may be that we basically address the covenant or the tranche that is pending, and the other one is coming after. So I'd like to circle back with our CFO and our chairman before I'd comment too much on the loan.
Right. And then on your shares, I have you at 299 million common and 421 fully diluted. Is that
Yeah,
correct?
that's correct. We have a fair number of warrants, and as you probably saw, a lot of those warrants are underwater. There's a few that fall off, I think about 30 million this year, but there are some that would be, 26, 27, but they're well over $1. We'd be really happy to get the price back up there and maybe they get exercised. But yeah, so it is. If all the warrants and options were exercised, it would be close to 450 million.
450 million fully diluted shares?
Yes.
Okay. Yeah, I do at 421. Okay, so you're yeah, so that's you're actually not investors, they don't dislike your company. I mean, you're trading your multiple is about a 4, which isn't a lot of companies are trading, worse than that. So you're not hated by the investment community. I think people realize that your potential, like I said, you guys have drill holes all over the place. I mean, you're about 75,000 acres, 30,000 hectares, and you have a lot of drill holes. Plus, not only have drill holes on surface, but you have a lot of drill holes at depth. A lot at depth. I mean, this thing's really, it could be a really deep mine. It's definitely, I mean, right now you're not mining very deep, but over the life of this mine, you will be. I mean, what's your plan? Your 3 to 5 year plan? How are you going to get this thing to 100,000 ounces a year?
Well, the big thing is that we are going to have to deepen the decline faster than the rate we're going right now. And those areas under the mine plan or the long-term plan, they're actually quite a bit wider structures. So they would be more amenable to long hole as one of the methods. So the key will really be is to continue advancing the decline. One of the things that without getting into too much detail, currently we've been using our jumbos, which drive the declines for not only the drifting but the bolting function. And we're looking to take them off the bolting function and simply be using them to drift laterally and drift in the declines, and then do the bolting with other equipment. So it's really the 3 to 5. And I guess the other thing is we've got areas, Don, we just don't have any drill holes. So we could easily have one of these feeder systems that's right next door or within a couple 100 meters, but we don't even know it's there. So that's part of the thesis of where to look, and whether we're looking for gold, whether we're looking for the roscolite, uh, you know, is there can we do a better job at understanding these feeders, and do we have more than one of these systems that's in proximity to our existing infrastructure?
Last question I have is on, the potential here, your property. So is it fairly based on your current infrastructure and your current mill, is it feasible to expand it to 1,000, 2,000 tons per day, the current mine mill?
Well, certainly the consultants that did the last technical report were designing it or were modeling it based on 1,000. So we certainly have the real estate for that. I think if this became quite a bit larger project, we do have some real estate. This again to so your readers understood this is a pilot plant. So again, is this the long-term location for a property that was, let's say, at a 1,000 or 2,000 ton a day? Not sure at this point. Clearly, we'd like to be putting more tailings or some tailings back in the underground once we get some of the cavities. Well, once we open up some stopes, we'd like to put more tailings in the mine as compared to having to build larger structures on surface. But and then some of the other areas that you alluded to, they're physically not that far away, but would it make sense to be trucking material back to a central mill? And is that central mill in the best location it might want to be in 5 years' time?
So when you say pilot, are you implying it's not a permanent plant?
Oh no, it was just that was the notion of it. It was really to test a few things. Number one, by starting this up, I mean, one could have built a larger mill right off the hop. The decision to go 300 was also, partly due to cost to get something built and get up and going. But we also have proven recovery that we have enough information to know what we should expect from this. And then from there, of course, we're going to be learning more with the flotation.
Right. So eventually it likely will be expanded to 1,000 tons per day. And then at that point, you're going to have to decide, do we expand this one or do we build another one? Is that correct?
Yeah, I think it's a fair comment. I mean, for example, we have a huge stockpile of core that's got to get moved closer to the tailings pond. So there are some challenges with physically real estate, but we also have a large land package. So I mean, one of the ones that interest me when I saw it was a copper porphyry at 0.17% copper over 160 meters. So but only a couple of holes into it. So we really, there's going to be more gold and other metals discovered for sure. And whether or not the current location for the mill and mine with the Tuvatu deposit, I mean, that deposit might go to depth, but we could easily have something that's better than Tuvatu and maybe something like Vaticula. It's just we just don't know at this point. It's just too early days.
Right. Okay. I'm good. Thanks for answering my questions.
Thanks, Don.
Great, Ian. Thanks a lot for coming on today and telling us about the project. And we wish you all the best. In closing, I just wanted to ask you if you could just give us really briefly just your background at Thompson Creek, because that's how we met, back in the old days. If you could just give us a little bit of overview on that.
Yeah, so I'm a mining engineer by training. Part of coming to this project was trying to bring a bit more operational experience. So I've worked in three deep underground gold mines in Canada, including Rice Lake, Lupin, and the Con mine, where I worked with Wally. And in a period of 17, I was at Rice Lake from 2008 to 14. The last 3 years, we took that from a 10,000 ounce per annum operation up to equivalent of 80,000 for the last 3 years. So this was again a deep, complex mine. Thompson Creek is a large open pit copper gold mine in central British Columbia, and we were able to get that up to nameplate between 2014 and 17 at about 60,000 ton a day. So that was kind of 0.17 copper and about 0.45 gold. And at these prices, it's hard to know if it's a copper mine with gold or kind of 50-50, probably a bit more in favor of gold now. So yeah, so that was And then most recently, I've been involved with Canadian Critical Minerals, which was formerly Braveheart. So I'm still with the company. We're in a permitting phase there, so I had certainly some time that I could support Wally and his initiatives.
That's great. Since I mentioned Canadian Critical at the onset, do you want to just take 60 seconds and kind of give us an update on what you see there in terms of cash flow for the coming, year or so, or just give us an overview of things are going according to plan?
Yeah, I mean, the project is in a waiting phase on permitting. It's a fully developed underground mine, kind of I'm just trying to think of my meters again, but we're down about 350 meters, totally dewatered. And what we're doing there is we had a unique situation with about 180,000 tons of mineralized material on surface. We put that through a screening crushing plant and then a sorting plant. And we've been sending high grade mineralized copper, gold, and silver to New Afton, kind of in that range of 4.5 to 5% copper, or about 5.5% copper equivalent. So the revenues from that process then go towards supporting the permit process. So that'll run out at the end of this year, but that's been quite successful, and I think that project is the only it's the only project on a full scale using an ore sorter for a chalcopyrite copper ore.
Great, thank you so much. And we'll Don and I will just talk amongst ourselves here, if you don't mind, for the close. And we look forward to getting an update from you again in the future.
Thanks, John.
So, Don, give us your thoughts.
Well, I've been excited about this project because I just think that the exploration potential for this to be, 100,000 ounce plus project has always been pretty solid. I mean, they have a market cap at 90 million. It was, I'm a little disappointed on how long it's going to take them to get to 100,000 ounces. Um, they're generating, 20 million in free cash flow today. Balance sheet, it sounds like there's some issues there. We might get more dilution. I wish they were, I wish I could get more excited about the direction. I mean, this is going to take some time. But I do think they're going to have discoveries. I do think it eventually is going to get to at least 1,000, and then it'll probably just. This is a type of deposit that just, I mean, especially at depth, they're just going to keep finding a lot more gold, but it's just going to take time. It's not the next, it's not at 90 million. For instance, they're not going to get to 60,000 ounces, maybe by the end of next year, but, they'll probably get 30, 40, but, you know, it's, it's not growing as fast as I would hope it to grow. I like their cost. I mean, they're definitely generating free cash flow, which is good, but I wish they had a little better balance sheet, a little faster growth. I like the location, like the exploration potential, like the grade. There's a lot to like, but it's not one of those ones that kind of checks all the boxes that you can get super excited about. Because for them to get to 100,000 ounces, they might have to at 100,000. If they go from 300, like they're about 360 right now, to 600 takes them to 60, and then 1,000 takes them to 100,000. So I mean, maybe they could get to 80,000 ounces a year in 2 years, maybe, um, which would, make them about a five bagger. Um, but I think this is like more of a 3, 4 year play. So um, there's so many, right now it's so easy to find five baggers. I can find five baggers all over the place, producers. I mean, Newmont's basically a three bagger. I mean, everything's a five bagger. 5+ baggers are easy to find right now, and so line one, I want it to look like a really solid 10 bagger because, it's a small producer right now, so that you have added risk. I'm hoping the ore sorting works out. The ore sorting could be a game changer for them if that works out. Because if they get the ore sorting in, their production is going to go up because they can still put 300 tons through, but they're going to put in 300 tons of high grade gold. So their production is going to really jump if they can, find more ore and then use an ore sorting. I mean, that could be a big game changer. They make a discovery. I want to own it, but I'm not as excited as I would hope to be.
Okay. Well, yeah, if you look at the chart when we get done here, I mean, one of the things that attracted me as a value manager is the price. I mean, the price of the shares are extremely depressed versus a lot of the gold peers out there in the junior side. They're trading, stock was holding 19 cents US very regularly over the last few weeks, and it seems to have bottomed now. We're at 21 and a half as we record this, 22, somewhere in there. It's got a lot of potential in price to me from this point because we haven't reached that FOMO moment as you and I have pointed out earlier today, but also on just about every show where this is not 2020 where a lot of people were just looking up, gold stocks and throwing money at them, right? But we're going to get there when we see a sector rotation, probably predicated by that sell-off we were talking about in the S&P and Nasdaq and Russell, maybe starting as early as next month, and then seeing that accelerate. I'm constantly looking for stocks like this that are trading at the low end of their 1, 3, or 5 year range, and this is one of them. So the thing that you had pointed out about the tons per day, I think that's valid. They're at 360-ish right now. I think Ian was saying that he could get to 600 next year, and if that's the case, that would take them up from that 16,000 to 20,000 this year to 50 to 60 next year, which is a big jump, right? And so there's obviously a re-rating potential there, but how much we'll see.
Yeah. Um, Key on this company is going to be exploration success and production expansion. That's the key.
Right,
So,
and that's why I wanted you to hear about his expertise at Rice and at Thompson because I met him more than 5 years ago through Thompson being a shareholder there before they got taken up by Centerra, and basically he had just said a minute ago that Rice was at 10,000 ounces, right around where a little lower than where they are now, and he took it to 80,000 ounces. So he's one of those geo CEOs, if you will, that can get it done. I think, and you need to see that growth to get more excited. I understand what you're saying, but I think he's got the capability not only with his experience, but also the fact that they already have an operation that's very heavily supported by the government. There's not going to be a rug pull with anyone coming in from the environmental side or whatever. They're fully permitted, they're ready to go, and they've got a very large project that's been producing for 90 years, so right nearby, right? So that's always a positive, I think.
yeah, they have it. Yeah. Ian definitely is capable of growing this thing. He's the right guy. I like it when the CEOs are engineers. That gets me excited. Yeah, once they get to 50K production, I think they're off and running as far as drilling aggressively and their balance sheet. You know,
Yeah.
so next year, 12 months from now, maybe 18 months from now, they get to 50K ounces a year. I think they're off to the races. At that point, they're going to jump from 90 million today to, you know, probably 400 million. So they're probably they could be a three bagger in the next 12, 18 months, which is great. But me, I want a 10 bagger. So we'll get our three bagger and then we'll have to wait another 2 years to get our 10 bagger because they have to expand production. But yeah, I'm gonna hold it. I'm a shareholder. I'll hold it. And but
Mhm.
I yeah. So I'll leave it at that.
Great. Well, thank you, Don. I appreciate the analysis, and we're going to wrap it here, everyone. We'll be back in April with some great interviews. I think we have two or three planned next month. It'll be our busiest month ever. So with 3,000 gold, there's a lot of people coming out of the woodwork. But Don, get some rest. I'm going to try to do the same. It's my daughter's spring break this week, so I'm burning the candle at both ends. But we appreciate all the analysis that you give us, Don, and all the stuff that you share with the investing community. I think it's awesome. And for those of you that haven't checked out goldstockdata.com in a while, please do. Don's tracking about 850 gold and silver companies there, and it's just an amazing resource.
Awesome. All right, John. See you in April.
Okay. Thanks, everyone.